Good afternoon, everybody, and welcome to this edition of Live Market Analysis ASX style. My name is Carl Capolino. I'm the market analyst over here at ThinkMarkets Australia. It's a pleasure to be joining with you as we dial down the hype of the hashtag banking crisis, pick up the pieces of our portfolios, and decide very simply whether to buy, hold, sell using what I'm going to propose anyway is the best analysis you can get anywhere in the markets. My technicals, my fundamentals versus your questions. You know how it works. It's a Q&A. So head over to your Zoom, or could be YouTube, could be Twitter, could be LinkedIn, could be Facebook. Let me know what you want to talk about, and I'll give you my best technical and fundamental reader. Let us commence with a few requests that have come through already via the good people at ThinkMarkets, and ThinkMarkets clients want to know about gold, it seems, and no surprise, it's been about the only thing that's gone up over the last couple of weeks. That's the gold chart on screen. We can see the almost vertical ascent from the double bottom, higher bottom pattern here, 1804, 1809, lo and behold, at the dark green zone. Now, if you follow me on Thursdays, we do other live market analysis sessions on Thursdays. We chat about the macro, the commodities on screen, indices, like the banking indices in the USA. We talk about foreign exchange, we talk about crypto. And we noted the potential there for a rally at 1804. Now, I must admit, I didn't predict how much it would go up, okay? But we said, look, short covering, 1804, see how it goes. It's done very well, because let's face it, nobody could predict that we were going to have a banking crisis on our hands. And the reason why gold has done so well, there's a couple of reasons. Let's head over, not there, that's coming over here. So what we can see here is a relative performance chart that I knocked up of the ASX 300, so Australian shares in green, the gold price, spot gold there in, you guessed it, gold, and the US 2-year Treasury note yields. And what you can see, this goes back to about August last year. Why? That's because, well, reasonable look back period, but plus also the relationships here become extremely strong. So we can see as the price of interest rates in the US, the short-term rates, 2-year yields rise, the price of money rises, gold and stocks tend to suffer. Okay, it's a very strong negative correlation. Then we can see a peak in short-term rates here. They tend to come down for a few months, and we can see that gave gold and stocks the ability to rally. And you can see how closely related both gold and stocks are, and inversely related to those yields. So you can see again here, yields took off, and both gold and stocks headed down until we get to this key inflection point, crossover point, whatever you want to call it, point of disconnect, where gold takes off. So yields plummet. They don't just come down gradually like we saw in the middle of the chart. They plummet because of the banking crisis. The fears that a banking crisis is going to yield a far deeper recession, which then will require the Federal Reserve to drastically cut interest rates. It facilitated the rise in gold, whilst stocks continue to get belted because, well, there is a banking crisis. So the other big thing about this chart here is it illustrates the market's thinking on quantitative easing. So if the Fed needs to not just cut rates, but backstop the US financial system, that means more printing of money, and already, over $160 billion of this short-term lending facility has been utilized by US banks. That's why gold has taken off. So it's this idea of money printing that helps gold, but otherwise interest rates falling also tends to help gold. So you've got that double whammy because gold doesn't have a yield of itself. If you're holding gold, typically it's costing you money, okay? Whether you've got it on a CFD trade and you're getting charged interest by your CFD broker, or you're holding physical gold and you have to pay someone to look after it for you with a couple of, large rifles or something, a couple of shotguns. So that's the environment in which we operate. If you've got a view on where the blue line is headed, that will help you understand where that gold line is probably going to go. Let us head back to here and then discuss potentially what could happen in terms of supply. And we are seeing that manifest itself already at 1999, let's call it 2000. So it is a key psychological level. We do expect there will be some profit taking there. that's the expectation. Now, what happens next is important. Do we get a really a sort of nasty cluster of supply side candles? They're the ones down here. I've pre-drawn them today. So you've got your supply side buddies, we call them, of your small body, potentially long upper shadow, or your long black body coming in around that 2000 level, saying actually there is quite a bit of supply here and the demand is not sufficient to sustain upward price momentum, and therefore we're going to get probably quite a severe pullback, and then you could see probably somewhere around that 1920 is where there's a little bit of congestion in the past. Okay, if we don't see those supply side candles, we instead see the demand side buddies in and around here, then we're going to go to 2070, and that does facilitate further upside, potentially in your gold stocks. The other thing I think it's worth noting here, if you are a bit of a gold bug, and that's not me, I'm the opposite of a gold bug. I'm happy to trade gold. I've said this in the past. I'm happy to trade gold when I think the gold price is going up, but otherwise no real interest and no belief that we'll be paying for loaves of bread with gold anywhere down the track. Okay, the other thing we need to note is that when we head over to the stocks, and I did this today actually, let's have a look at this. So I ran a scan today just before we started, so you can see 21st of March, and then I grabbed the whole GICS sector. You can't see it. You can't see these pop-up windows that I have in my charting package here, but I grabbed the whole GICS sector. So anything that's got gold related to it, as far as the GICS category, it will be scanned, and then I ran the scan and I came up with just these stocks. So yes, gold appears to be looking good. Yes, there might be some macroeconomic fundamentals that can continue to cause that to occur, but when we actually look at the gold stocks, there's very little to get excited about. And I can certainly look at these charts by heading back over here. BGL, I think, looks very, very good. That is probably in my top 3, I'd say, at this point in time. Then we've got this one. It only came up on the scan because it had that huge pop. I'm guessing that's a takeover bid for Breaker Resources, and correct me if I'm wrong, but that is a New Zealand gold miner. Then we've got Kingsgate, which looks okay, but I would not be calling that a screaming buy, even as gold's going up. Look at this huge supply side candle that's been put in. So what we're seeing here really is sort of sell the rally sort of stuff. And then Newcrest, which I actually think looks very good. That's one of the other 2 in my top 3. Happy to hold that one, and I've been happy to say that for some time. Ramelius came up. This is one we clearly looked at a couple of weeks ago, I'm guessing, because we said if it closes above the supply zone, you could go plus 1/3. But then we got this huge supply candle here. Look, hardly convincing. If you're in the 1/3, I think you hold on to it. Do you buy it now? No, I don't think that candle permits it. And then Rox Resources, which is a little bit small and a little bit obscure, but I think that looks pretty good. If I sort of, off the top of my head, go and look at a few of the other ones, Rand Mining, just randomly selected there, but probably is a gold miner given the name, is not one I wanted to talk about, but Northern Star was the next obvious place to go. We zoom in. It's another one again. We discussed it last week, and we said if it can. Actually, I think we might have even said plus 1/3 if it closes above the point of supply. It looks to have done that. Happy to hold that on that basis. Would I be adding more risk? I don't mind. Again, we need to see even today. Even today, we've had that little pullback. So if you say that area there, which was an old POS. So this is the old POS here, and we're hoping that it then subsequently acts as a POD. If we see the demand side buddy candles coming in here, and let me change that because we're going to want to make it black, and we're going to want to put that on there, and we're going to want to just, it's not going to let me do it. Anyway, you get the idea. So that's the candle there. Or potentially even its PAL, which looks like that. So yesterday's candle is pretty similar, but from here, if you see those again, then happy to go plus 1/3 on that position. Going down the list, we could look at something like a Perseus, which we can see we've again talked about in the past, is at a very clear point of supply zone. So whilst this is a strong demand candle here, that's impressive. We can see that supply is manifesting itself in the market today, and therefore warrants a little bit of, I guess, caution little bit of a pullback. The right candles, demand side candles coming in the green zone, probably around here, potentially even some catch up from the short-term moving averages. And then I could certainly look at that one on a close, white candle, nice white candle close above there. I could consider a third on that. And just change that so you can see it. Heading further down the list off the top of my head now, Silver Lake Resources. It's one I think we said last week wasn't ready yet. We're too concerned about the long-term downtrend. I don't think my view has changed on that. I don't think that's a very high quality setup. Now, having said that, could end up being the best one. I don't know, but I can see any of the other ones we've talked about thus far are looking better than that. Evolution, I know, is a favourite. I would have called it a short. In fact, I did call it a short on this breakdown here. And macro circumstances have conspired to make that call look like mud. But I don't think it's one I necessarily will be running out to buy just yet, because this is very strong and this is very strong. Now, having said that, my view is flexible because the price is flexible. If I did see something that looked like this, okay, with the right candles in the light green zone, so it shows, I guess, how much needs to happen before I would start to turn positive on this. So with your right candles in there, I could contemplate a plus 1/3 on that basis. So not only just looking at what's happening now, but giving you some idea of what to look out for in the future if I'm not around. And if that's the case, then we could consider plus 1/3 there. And SBM, I know, is a request that's come through from Adonis. I'm going to go ditto on Evolution, not shooting the lights out. If I had it, I could happily hold it on the basis that we have moved back into higher peaks and higher troughs. And yeah, the candles look pretty reasonable. The short-term trend appears to be changing, but not convincing yet. But this is just too powerful. I don't think I want to muck around with that. So I could go hold as long as it sort of stays above this level here. I think beneath this level here, you're changing your view on that and you're going minus 1/3. But happy holder in between. And where am I going? I wanted to do, no, I did the scan list. And PNO was another request that came through from Danny on the Twitter. It's not PNO, PNR, which Danny, I think we're a long way away from calling a buy on that. It's just, the trends are just too well established to the downside, aren't they? So, my philosophy on trading, I need to see trends turning up, or at least the price action indicating that those long-term trends will turn up sometime in the near future. So I'd love to see it get above there, pull back, hold, and then maybe on the next push through, it could start to look good again. But really, bigger term thinking, there's so much more that needs to happen before we can even contemplate saying that the low is in on that. It's just not my trading style. And I guess maybe it might have some great fundamentals. I don't know, but it's really not looking all that impressive there. So that, I think, is a reasonable overview. Maybe something like this looks pretty good as well. So this is more of a silver play here, or it is a silver play. Adriatic Metals, happy holder there. I know we've talked about this one in the past, and I've run it as a feature chart also in my tweets over the last couple of weeks. So I think that one looks very, very good. The silver chart, if you're interested, it doesn't look anywhere near as good as gold, but it doesn't look awful either. So let me find that for you very quickly. And then I'll get to some of our other requests today. There's a silver chart there. Okay, you can see it's way, way further behind. If I've missed any of those gold stocks, then certainly let me know. I'm going to head over to the Zoomers now and we'll do some of your requests. PCR, I'm not looking at the right thing there, so ACF. Acrow Formwork and Construction. This one's from Ben. Ben, I'm going to go ditto on whatever I said about it last time. I don't think there's anything so sinister in the chart there to suggest that we need to be managing our exit just yet. So pretty happy. Let's, in fact, head back here. Pretty happy holder. This is all very good. This is all very good. The price action is somewhat congested. That is because it's quite an illiquid company, to be fair. So I'm not too fussed about it. The candles look fine. And there's nothing so terrible in those candles to suggest that we've got those supply buddies at work, or supply is sort of really starting to take control of price. So happy holder there. Would I buy it? Look, not on the last candle. You know the demand side buddies, you know what I need to see, and preferably we kind of see them, occurring around the long-term uptrend zone sort of through there. Okay, and then maybe we could consider it, but I don't think there's a whole lot really to discuss on that one. I'm not sure if I did it last time, so we might just quickly check up on this in terms of the company valuation. And what we have here is the Thomson Reuters Refinitiv Icon spreadsheet. The spreadsheet I get from them, but then I have remodeled it significantly. This is all my intellectual property down here, but it gives us broker consensus data heading forward. Okay, so the brokers are polled by Thomson Reuters, and they're asked for their estimates, for example, for revenue for the coming financial year, the next year, and the next year, and so on and so forth, for net income, for dividends per share. We also have historical data that we can then put together with our future data to give us trends. So we do have 3 brokers covering. We've got a high target prices of $1. We've got a low of 88. The average target there is 94 cents, which allows for 19% upside. Interestingly, the lowest target price is actually above the current price. We have 1 strong buy, 2 buys. Because it's a smaller company, brokers that cover it tend to be smaller brokers themselves, and they tend to be quite bullish. Otherwise, why else would they cover it? In terms of the EPS line, I like to see bottom left, top right growth through history. I can forgive, for example, a 2021 or a 2020, given that we had a pandemic and we also had significant supply chain shortages, which might well have affected a company like this, which is in the construction sector. And then I like to see some pretty good growth going forward. Pretty good would be better than 4% compound annual growth rate, and that's because it's kind of looking through here and actually not taking that into account, but probably happy that it isn't. Ordinarily, we'd be looking at these 3 numbers, but we just don't have a third year here. So with 4% growth after the current financial year, which let's face it is 75% over, and that's therefore, I think, valid to not include this. Let us say, without manipulating the risk level just yet, that a 4% growth rate probably is justified by a 7.6% PE. So because this is roughly half of what we'd expect compared to the market average, the PE is roughly half also. I don't see any reason to disagree with that substantially, except to say it is very low compared to the 5-year range. So it is kind of a very high hurdle rate to apply, but it is not out of the realms of what the brokers are saying in the future. And with it being below market growth, I'm struggling to find a reason to disagree with it. So I would say we're probably about more like fair value on this. And it's no surprise that probably my estimates are going to be a bit more conservative than the brokers who are covering it, because they're covering it because they love it. So I'm going to say, look, fair value. I'm not finding any major red flags in there to suggest that we can't continue to trade on the technicals, which is my primary source of decision-making information. Okay, let us keep moving and head over to DUR, which is Duratec. Actually, this one also from Ben. Well, Ben, for getting the luxury of first in there, because I normally wouldn't do 2 from the same person because I want to get through everybody's charts today. We were looking at this and saying if we saw the right candles, and I never know which one's the Tuesday that we looked, but we were contemplating if it was to put in, I guess, the demand side buddies, that we could go long. I'm not so sure if we ended up getting it given the supply in here. We didn't quite eclipse it, and therefore, just from me, so the candle I'm talking about here is this one here. That really does make me quite nervous, especially when there was a little peak trough movement in here. But that doesn't mean I can't go long, but I just need to see a really great candle. And this candle here is not it. It's not as good as to the upside. So the one I'm talking about now is this one here. This one is not as good as the previous one. And then we didn't see anything since then, which would suggest an entry. Buy, hold, or sell. I can certainly see a path to holding this one because this is all still very good. But we can see that the momentum is changing. That's very clear. The momentum in the short term is changing. The momentum in the long term is still okay. But I would be a little bit more cautious about this one. And I'd be saying probably, given the candles, so you can see some supply side candles building in here, lower peaks, lower troughs, that we would seriously think about managing our exit. And so how quickly things can change, but we're not necessarily dumping everything here. We're certainly saying, I think this is off the table, so I'm going to draw a line through that. But the question mark is, for me, look, where do you start to manage your exits? It's probably not that far away, just taking a little bit off the table. I would say if we get a close beneath 75, then minus 1/3 on a close beneath 75. So somewhere around there, it's just warranting an exit, a partial exit. But you would still, therefore, by default, still have plus 2/3. Okay, so I'm not saying you need to panic. I'm just saying that if we took a little bit off the table here, it's not such a bad thing, especially if it continues to come down towards that long-term trend zone. If it heads back up, well, we've still got 2/3, so we can always add back in if we need to. But we are not going to ignore some of the building signs of supply in the market. That's really all I'm saying. Let us go to King. King's got MYR. And I'm going to zoom out. It's very important we zoom out in between doing our analysis. Had a run already, but can it continue? Goes ex-dividend tomorrow. Look, I think it can continue. Look, there's nothing really terrible in the candles there. This is all very good. I don't know what this news was, honestly. I don't follow this stock very closely. It did come back, close the gap. I mean, these aren't great candles, but hey, the market's been awful as well. And I know that I know even though it's pulled back, it's been beating the market, because down here, we can see in the relative strength, it is very much beating the market. I'm a hold. Could it be a buy? Yeah, I don't see why not. This old area, there's a bit of supply in here, right? So you can see the supply in there, and the evidence suggests, it's not me making this up, I'm saying the market is suggesting that there is demand in here. You can see that candle and a bit of a follow through. A little bit disappointing today because obviously the broader market's up and it's not doing a whole lot. I can go hold. Look, if the candle started to look good, we're going to have an ex-dividend tomorrow for a few cents. It's going to come back in that range. But again, if you start to see these sorts of candles, these two together even, they would be bullish. And if I saw those, then I could certainly think about adding some risk to that one. So no major complaints about it. If we have a look over here, it's going to appear in a second for you, and just check what the brokers are saying. Interestingly, only 2 estimates for a big company like Myer. That's a little bit of a surprise. But it is what it is. 90 is the high target and the low target is 39. Well, that's astounding. And because an average takes those two and adds them together and divides by 2, we get 64, which is potentially 35% below the current price. We've got a hold and a strong sell. So hardly glowing endorsements. In terms of the earnings per share, we don't have that bottom left, top right growth, but we can forgive a poor performance by a company like Myer in the pandemic. And looking forward, the big problem here is we don't have a great deal of growth going forward either. So we're looking to struggle a bit, I would suggest, on making this one work. And we would have to match that up first anyway. And that makes this make a little bit more sense because this minus 29 is more than outweighing the minus 3 and the plus 4 there. So yeah, look, I can't make a case for this one on the basis of valuation. I think the current PE, the hurdle PE there, which is 13, which is what the brokers are using going forward. I think it's, whilst it's low compared to the 5-year average, I think it's very high compared to what I would pay for that. So I can't find a valuation case on Myer. Okay, but hey, somebody's buying it. Look at that. As bearish as the brokers are, as poorly as the valuation checks out or doesn't check out, the chart's going up. And there you go. You have to make your decision. Who do you believe? Price action. The people in the market working, not telling you what they're doing. That's the brokers are telling you what they think. They're not telling you, they're just doing, right? Very, very interesting. Okay, let's head over to Gary. Gary's got a few here. I'll certainly do the first one for you, Gary, which is Healius, which I think looks okay in terms of last 10 candles in a row, or a white allows me to hold it. I'm not sure if I'm a buyer just yet, because again, broken record sort of stuff. We can see that the long-term trend continues to be down. that contrasts somewhat to the short-term trend, which appears to be turning, but it's this great batch of candles that I really admire. Now, I could buy it if it does some stuff, okay? I can buy it on the basis that these candles look good. I can buy it on the basis that the relative strength has once again began to improve. But you know what I need to see. I'm just trying to figure out where I want to see it. Well, clearly sort of through here. This is our big supply zone, and you can see where the long-term trend's starting to interact. So I'd say there's a fair bit of work to do before I started to contemplate buying this, but at least for you, Gary, something that looks at least like that. You know the candles I want to see. So at the earliest, it could be something that resembles the right candles in there. But even then, you can see that this is, you know, really a super aggressive, you know, long buy, whatever you want to call it, because, you know, it's a turnaround play, and you really don't have this sort of overwhelming or sustaining evidence that demand is, you know, in excess of supply at that point, even that I'm suggesting. So, and you certainly don't have it yet. So I can go hold on the basis that I'm seeing some demand come in. I'm seeing signs that demand is beginning to overwhelm supply, but I can't go long, and that's just unfortunately my methodology. Well, it's not unfortunate, it is a methodology. And I'll put to you, hey, what's your methodology? Do you have a set of rules that you must always abide by? Because it's not just your methodology, it's your philosophy, it's your ethos, it's how you operate. And what I teach you here is how I operate. And I'm happy to not buy something at the bottom. I'm over the moon not to buy it at the bottom. And don't lament, oh, I should have bought Healius. Now, why didn't I buy Healius at the bottom? Because I know that when it was at the bottom, it was a picture of excess supply, and nobody, not even Nostradamus, could have predicted that that was the bottom. And some people say, oh, but it was too cheap down there. Well, okay, smarty pants. It was probably too cheap 20 times before that. It kept going down. So what is your methodology? And, you know, do you have something really to hold yourself accountable to? Let's have a look at Healius on the valuation. We've got some great data here. I mean, the first two we looked at, 3 brokers, 2 brokers. Now we've got 12 brokers. So we can put some confidence, I guess, in this data. The high target 4, low target 260, average 306, pretty much bang on where it is. The rating is not inspiring. 2 buys, 6 holds, and 4 sells. So 4 brokers out there have looked at this. They've gone through Healius line by line. Think about that. You've got whole floors somewhere in Sydney, right? Office towers in Sydney of analysts, highly trained, half an alphabet after their name on their business card, many years at university, working at Goldman Sachs, you know, wherever, right? Saying that, you know what, I've looked at Healius and I think our clients should sell it. EPS line, bottom left, top right, not really, but, you know, we can see why that might be the case in 2020. But then we see this massive cycling of, a post-COVID bump, and we're dropping from 52 cents to 6.9 cents, but then we're starting to build back from there. So we do actually have some pretty good growth going forward. A very impressive 38% compound annual growth rate over the look forward period, which means that I would happily pay 21 times earnings. So I don't think that's the wrong number. It is not the lowest over the last 5 years, but probably not unreasonable. Yeah, not unreasonable. I'm going to stick with the brokers on this one and say that's fine for that. And therefore, I think Healius looks pretty cheap here, despite what that says and despite what that says. So there's certainly nothing on screen that would suggest I couldn't buy Healius if I can make the technicals line up. Okay, we're seeing some buying coming in here. So somebody else thinks it's cheap as well, despite those 4 sells. How about that? Okay, let's keep moving. Gary, if I get time, I'll come back and do those. Let's look at IEL. Pretty sure that one is Chris from you. So it's very important you give me codes here. I'm pretty good at obviously knowing names, but I can't know them all. So give me the accurate ASX code. IEL, which unfortunately is breaking down here. And you can see that we should have had an area of demand through here, and it's failed through there. The good news is there should be some demand through here. And we're in it right now. So what we need to see is how that demand, or if that demand manifests itself. Okay, so if we do find that we're getting some candles like this, okay? Because the market would be looking at that zone and saying, well, the market thought it was cheap there before, the market can think it's cheap there again in the future, right? So if we see these candles coming in, it's telling us that the buying has arrived, okay? And why would you try and pick the bottom prior to the market telling you that the buying has arrived? So right now, is it a buy, hold, sell? I could go hold, but only on the basis that I want to see how it trades here. Otherwise, I can't see a reason to own it because the short-term trend is down, the long-term trend has failed right here. So break, test, fail. And there's not a lot of good stuff else going on here, unfortunately. So you've got a big area of supply. Even then, would I buy it here? Probably not, because we've got supply all the way up here, don't we? There's some trouble here. So yeah, I don't think I can be any clearer on that. Not a buy. I could have more confidence in a hold if we saw those candles, and only holding just on the basis that maybe there's going to be some demand here. But beneath that demand, so under here, I think all is lost. Starting to look very shaky indeed. Let us head over here and very quickly have a look at IEL, which is IDP Education, one of those very frustrating companies that has a sort of 3 letters in its name, but then a different ASX code. We have plenty of coverage here. 12 brokers, 37 high price, 24 low, for an average of 33.84, which allows for plenty of upside there, 27%. We've got 2 strong buys, 9 buys. So brokers are very positive, yet someone selling it. 1 hold, 1 sell. I don't think I'd apportion all the blame on the recent price weakness on that single broker. EPS line has some problems here. But again, given the rest of it can probably just put that down to an aberration, and then looking forward, the growth looks incredible, not just good, incredible. So obviously it's student placements, isn't it? English language tests, mobility of students in 2021 taking a hit. So that again, that's okay with me. And then we're seeing some great growth over the forward-looking period of 24% compound. So that's very attractive. Could I pay 33 times for 24% growth? I could, but it's starting to get probably towards the high end for me. The average market growth is probably 7 or 8%. The average market P is 15. So I'm just saying, well, at 33, we're well above the market average, but so 24% is well above the market's growth rate as well. Let's check how this 33 compares to the 5-year range. It's extremely low. So it is, I think, a suitable target rate in that regard. And therefore happy to stick with it and back. I think the brokers are backing some premium here. So my valuation is not as good as the brokers, but it's still saying there's plenty of upside in that one. So once again, if you're just doing fundamentals, you would look at that and say, well, I have to buy it because it looks very cheap. If you're doing technicals, you'd say, well, I might be interested in buying it, but only after these things occur first. Okay. I'm always one to say that the technicals win, because the technicals are not representing what brokers are telling us to do, but representing what the brokers are actually doing. Sometimes what they do is different from what they tell us to do. Okay, let's go to Lindsay Australia. This is a transport company. Oh, Perry stuck in another one. Let's actually, I don't think I've had Perry, so apologies, Perry. I've accused you of sneaking in another one. That's not true. This is your first one. I had Gary before. Okay, I'm happy holder here. Today's candle is not ideal. Of course, it's a black candle. Hey, if we're long, we don't want to see those black candles. But is it so severe as to precipitate a big sell-off or profit taking or whatever? No, I don't think so. So happy holder here. We've been obviously very positive on this one in the past, and I see no reason why you can't continue to be positive on this one. Would I buy it here? No, I wouldn't buy it here because it's too far away from my light green zone, and I prefer to buy it closer to that zone. So happy holder in the meantime, but just be aware that you probably want to knock a few off at that $1 zone, just for the sake, just because it's at $1. So for me, it's just the way I operate. And again, you'll have your rules, I'll have my rules, and I always stick to my rules. And if we could see that, then I could go minus 1/3 in there. But again, we're not selling the whole lot. I don't like to be all out, especially if something is doing so well. Why would I sell my entire position if it's doing that well? But I do understand that people do like to supply at round numbers, and therefore I will supply a little bit and see if I can't pick it back a little bit cheaper within the broader trend. So happy with that one. Having a quick look at it over here. I know we're going quick today, but that's okay. We're trying to get as many questions answered as possible. And we do have just the two brokers covering here, pretty tight range there of highs and lows. Average is 84, which would suggest it's a bit overvalued after its recent push up, but broker ratings are still buy and a strong buy, which would indicate that they'll probably ratchet up those targets anyway, right? The transport company obviously benefits when the crude oil price comes down. It will help massively help them on their cost side of the business. I'd suggest probably the price of fuel is their largest cost. And therefore, that's why they've had a bit of a spike, because that big pop-up, big white candles corresponding with big black candles in the crude oil price. EPS line is a bit lumpy, but not surprisingly, a transport company would suffer during a global pandemic. And therefore, looking forward, we are actually pretty good. So we've got some good growth here, at least market, but looking cheap here. This PE, I think, is very, very low for the growth that it has. And therefore, I think it's very low compared to its 5-year range. I think this looks very cheap here to me. So I think these brokers will end up updating their price targets. I think if we come back and look at this in a month's time, we'll see these price targets much higher. And I think that with a target P of 9 and getting a valuation of 98 cents, it looks very cheap to me. Okay, let's head back here. And let's do RSG is one Perry's just saying you forgot to do in your gold. Okay, let's have a look. There you go. How about that? Okay, this. I'm happy to buy this at some stage. I don't know if I want to chase it here. Okay, so it's just too far away. But on any pullback with the right candles, then I'd be looking to have a crack at it. And what I like is the fact we've taken out that supply level. Let me just go back and see. They're probably going to be a bit in there as well. Okay, but yeah, let's just see where it pulls back to. Let's see what the candles give us. This is all fine through here, right? So yeah, that's one of the better ones there. But unfortunately, it's just pushed too far away from my light green zone. Not to say that, hey, if you wanted to have a crack at it here, everything suggests that it's fine. I'm a happy holder. A hold, no question about the hold part. It's just whether I would buy it, and I'm just preferring, given we are actually sort of just around a couple of supply zones, just waiting to see how that supply manifests itself in the market. Okay, let us head to TechnologyOne for Colin. Under a little bit of pressure here, isn't it? And look, obviously the broader market hasn't been great. It's actually held up pretty well, all things considered. You can see here that on a relative strength basis, it's still beating the market. But if I showed you the market, for example, that chart's pretty horrific. So for TechnologyOne to be coming down a bit as the rest of the market does that, I don't think you can, accuse it of being terrible. But the price action is turning. That is something we can't ignore. As good as high quality as a particular stock might be, and I think there's plenty of quality here. We are just in a phase where we are probably going to come down and test some lower demand zones. So certainly there's a key zone in there, and that is lining up also with the long-term trend zone. I think if you had been proactive at managing your exits up to this point, you might have dropped a third of it, but only a third, and even then, really only as it kind of broke through that level there. But then, yeah. So and this has just been the most proactive person in the world. You would have gone 1/3, but you still happily plus 2/3. 2/3 on that one, so no qualms in holding on to it, especially if you're more of a longer term investor. The evidence still suggests that we can be holding a position there. Okay, are we buying it? No, we're not buying it for obvious reasons. What would cause us to buy it? Well, it would need to do all the good stuff that we talk about in here. So get back to higher peaks and high troughs, from lower peaks and lower troughs. Throw in some really nice candles in the light green zone. I keep talking about the light green zone, and then lo and behold, it appears on the chart. Okay, and I won't draw the candles we want to see in there because you know what they are. They are the demand side buddies. Let us head very quickly over to here and do TNE. TechnologyOne. let's see what the brokers are saying. We've got 10 brokers, so great coverage on this one. 1550 high, 11 low target, average target pretty much where it is, interestingly, at 1360. No strong buys, 2 buy, 7 holds, 1 sell. A little bit polarizing. Brokers tend to be clustering around the middle there. EPS line, very good. Bottom left, top right, was not disturbed by the pandemic, by the supply chain disruptions, and by whatever we're doing right now, isn't it? Inflation and rising costs of living. Looking forward, we're bottom left, top right, continuing with 16% compound annual growth over the look forward period. That's going to change because I need to change the forward looking period. Actually, coincidentally didn't, because we've got 16, 16, 16. So we're looking at roughly double the market's growth, but we're paying for it, aren't we? We're way more than double the market's typical PE. And this is the broker saying there's quality here, everyone. And that's why the brokers are saying, well, 37-ish going forward, which is way below the 5-year range. I don't think there's any reason to doubt this. I think it's right. It is high-ish. It is definitely on the high-ish side for this, but you kind of have to go with the broker to say, well, I'm kind of respecting the quality here. Anyway, there's no red flags here. I reckon this is at least fair value, if anything, probably bordering on the side of cheap, if the brokers continue to find that palatable. Okay, if all of a sudden they say tomorrow, look, we just don't feel like paying 37 times anymore, we're going to pay 20 times, things are going to change, aren't they? Okay, 30 times. Okay, I'm just showing you the difference on how sensitive this line is. If we match the two, the current market PE is more like, let's have a look, we would have to get that up, so 33, say, no, 31.5. Yep, there you go. So the market's saying 31.5 is appropriate. That's the current market price. And then, you know, the brokers are more like 37. Maybe that's why I'm saying that maybe that's a bit on the high side. But look, nothing so sinister in there to say that I shouldn't hang on to that one. Frustrating. I've got a journalist calling me from Reuters in the US. She always calls at this time. I'm always in these sessions, so I can never get to her call. And let us head back to here. So Akisma, if you're watching by any chance, that's why I can't answer your call, because I'm in session, I promise. Let's go to GrangeResources here for Hanelli GRR, which has been under significant pressure. It was just starting to look good, wasn't it? And you can see the scratchings we've had where we've said, look, in the past, you seriously need to consider lightening the load, and then really, unfortunately, you know, lightening the load again, and then lightening the load again. And I can't see a reason to be in this one. So, you know, as we're breaking through here, you know, minus 1/3, and then those candles minus 1, it's just not worth it for me. So can I hold it? I can't see a reason to hold it. I can't. I'm sorry. Buys off the table. Sell it. You know what? I'll leave it up to you. It's just you've got to be more proactive, unfortunately, in taking your licks and moving on to the next one that hopefully is literally the opposite. So if you literally inverted this chart, so you literally flipped it this way, right? And then changed every black candle to a white candle and changed every white candle to a black candle, you would literally get the chart that you want to see. Okay, it's literally the opposite of what we want to see right now. And Ellie, I know you're a big supporter of live market analysis. So let's go over here and see if I can maybe make some sense for you over here. Unfortunately, no broker coverage, so I can't give you a valuation. Okay, let's keep moving. Quick fire today. I want to get through everybody's requests. I predicted we'd have plenty. Hanelli saying potentially she should rather consider BGL, and I think so. Yeah, I think the BGL chart compared to this one is actually this chart flipped over, isn't it? Peter asking for WTC, Wisetech, and quality, again, quality, but we saw what happened to TechnologyOne, didn't we? You know, quality succumbing to the broader market weakness. But here, geez, quality is on show, ladies and gentlemen. This is quality. Doesn't mean it can't come down. Even quality goes down when everything gets belted. But boy, is it doing a great job of hanging in there. $1 million question. You know I like the stock, right? I've called it a buy many times in the media, the call, wherever I've been. I like this company. But at the end of the day, you have to heed the market's warning signs. Where would you lighten a third? Man, this would be, I shouldn't say man, because that's very binary, isn't it? Everyone. this would be the most jittery investor in the world, okay, would be looking at a close beneath, and I'll give you the level. That low there is a 60.86, okay? The most jittery investor in the world is doing that. And just decide how jittery you are. And there's probably reason to be jittery right now. But even then, you still be plus 2/3 for the broader trend and waiting and watching. I mean, if you've just exited a third, the market is telling you something and saying, hey, be careful. There's a reason why you got out. Be super attentive now for other signs that you need to get out. So if we saw something like that and then a fail there and then another move through. So we're talking about if the points of demand, right, start to act as points of supply, right, as supply is building as well, the writing is on the wall. Maybe you need to be thinking about lightening the load, even though it's quality, and it's seeing if you can't get it back somewhere a little bit cheaper down the track. And your worst case scenario, and this is always your worst case scenario when you sell, and you just have to become comfortable with it. And the people that are the most comfortable with this, what I'm about to say, are the ones that make the most money. You can always get back in, right? If it starts to go back up again, it starts to throw in high peaks and troughs, the right candles in line with the quality we know this stock is, you can always get back in. But what you don't want to do is do a Novonix. Now, I'm not saying Novonix was anywhere near the quality of Wisetech. It's not, it wasn't, it never was. But my point is, you don't want to hold on. Maybe Domino's is a better example, because people would have argued, oh, Domino's is a quality blue chip stock, right? And it faltered here. And look how it faltered, everybody. I can't make this stuff up, okay? And you might say, oh, well, you know, you just draw everything in hindsight, Carl. Well, really? Or am I just drawing stuff from years, decades of experience? Hey, if you want 5 minutes worth of experience in the market, go find somebody with a hoodie on TikTok. But I find time and time again that when, doesn't matter how good something is, right, and what the narrative might be, when you see this pattern, it's usually not good, right? Let's face it. And then you see, look at this, that pod starts to act as a POS. The candles are black. And really, if you're still holding a full position of Domino's, yep, below 150, I think you have never heard of me or anything I've ever had to say, or you're just hoping for the best and you're a great narrative. And there's so many reasons to get out after that. And then it breaks the long-term trend, it tests it, it fails, and then, you know, off we go. Hey, is that, look at this thing now, gosh. I might as well do it. We're here now. Those two candles aren't bad at all, to be fair. Let me see something like that first. Let me see how it behaves in the light green zone, which is about to appear on your screen. Let me see the candles there. But holy moly, we got some work to do, don't we? This is starting to improve. How do we get here? We're talking about Wisetech, all right? So even the mighty can fall. Will I do the Wisetech numbers? Let's do it. WTC should have plenty of broker coverage here. In fact, we do $13.80 just about on the high target, 52.19. Quite a wide range. Brokers are saying roughly here or just below his fair value. So we've got some upside there. Quite polarizing, actually. I'm surprised. Oh, well, no, we've still got plenty of 7 buys. And then 7 not buys, if you want to call it that. Bottom left, top right on the earnings, a little bit of a blip. You can see why for a company that tracks cargo from point A to point B or helps their customers do that. 2020, when there's no cargo moving around, that's probably going to be a pretty bad year. But then when supply chain shortages hit, you need to know where that cargo is. And we can see really the boom in earnings that we're in and that we will continue to see. And if we make this right first, we get 31% compound annual growth rate. Would I pay 57 times for that? Geez, that's rich, isn't it? And this is the problem. This is the leap of faith you take with Wisetech, is the market knows it's good. And that's why the market's paying such a huge PE. That is eye-wateringly high, even for growth that good. What is it? Look what they've paid in the past. You say, well, 57, Carl, that's crazy high. But look, the market's paid way high. I mean, double that. 84 current. It's coming down to 37 here. it feels high to me, but all it does is if we just say, well, if that's high, we can just maybe change that to a moderate risk. And, look, I still think it looks cheap, even if I left that at low, let's say we believe the brokers and it's going to hit those targets. And I say, well, what would I pay? Probably the better way to do it. What would I pay? And where do I cap out? 40? Tap out at 40? It's at least fair value. Okay, that is where I typically tap out in my growth stocks. It's at least fair value. That's fine. So let us head back to here. And getting down the list, I'm going pretty well. Haraju wants AVH, which looks okay, but Haraju at risk of me being the broken record. There's the little peaks and troughs in there. Oh, actually got it swung a little higher one there. So look, it's okay, but look, I think clearly now, and this is just the possibility, not the prediction. I'm not predicting this is going to happen, but we need to be wary that we've gone POS. That's okay. Look, POS. Those are still rising. Pods are still rising, right? So this is okay. We're okay. But I would say if we do close beneath this pod here and that low there, I'll tell you, is 378. So close beneath 378. I think we're starting to manage our exits on that, so we're going minus 1/3. Have we seen anything so sinister prior to that to justify exiting a little bit more? This candle here is the one my eye is naturally drawn to. The gap in here is not great, and the fact that we are failing to get into this candle's range, I think is actually disturbing. This candle's disturbing. Let me tell you, if this candle doesn't close out as a really good one, I reckon you could just manage your exit just in case anyway. Okay, so on the basis that we're failing to get into that range, and I'm just updating my data because I want to see the current update and see how that changes. It hasn't changed much. So this candle I think is pretty important here. Closing towards the lows, you could basically, I think, preempt that 1/3, and then the next level would be the second 1/3. Okay, but otherwise keeping some skin in the game, even if it's just at least a third, on the basis that we are in a very good point here. And I would remind you that you can, got something like Neuren where you don't want to be all out. And interestingly, we said last week, just on that $10 round number, we said, look, if it can close with a big white candle, scratch that 1/3 exit for the $10 level and hang on. I'll let you decide whether it did enough there, but I think it did. And that one still looks great. Happy holder there. I can't see any reason there to sell that one. And I know the mind probably boggles because you think, well, Carl, that's gone up so much. Surely it must be too expensive. Surely, you're better off selling that. And I say, no. There's absolutely 100% reason to hold. This is 100% a hold. Would I buy it here? I'm actually not that far away from buying it. It's that good, but this distance here is holding me back. It's just too far from my light green zone. But otherwise, that's a good candle. That's a great candle. If it closes there, it's still live. And then this looks like getting set for another leg up. So 100% a hold, 0% sell, and buy. Geez, it depends on how brave you are. But that looks good. And the other one, again, Weebit Nano is worth also bringing up. This is why you kind of need to keep some skin in the game. We're still saying plus 1/3 on this, but I'm losing the grip on the 1/3 just on the basis of these last three candles. And let me give you a level here. That low is 690. So I'm going to say, this is just my feeling. You do whatever you need to do. You do you. That's what I always tell my kids. You do you. Minus 1/3 if we close beneath that 690, okay, on Weebit. And I know I got a little bit off topic there, but certainly stocks that are popular and I know people want to know about. This one's from Daniel CXM. How are we going for time? We're not too bad. I'll probably finish these lists here. Look, I'm going to do this one very quickly, Daniel, because there's nothing to see here as far as my systems are concerned, okay? The long-term trend is okay, it's up, but any good that this is doing is countered by the fact that it's very flat in the first place, and you can see it's been very flat for a long time. The candles are sketchy. This is a very illiquid stock. These aren't normal candles. These are candles of a stock that doesn't trade a whole lot or in a very wide range during the day. You can see the volume there. Very little interest from the volume side of things. The candles are predominantly black. The short-term trend is turning down. Buy, hold, sell. It's not something I would be in the first place. So it's hard for me to say, would I hold it? I wouldn't be in this. In fact, if I had it right now, I'd get out of it. Now, having said that, because I want to go do something better with my money. Having said that, is it possible that tomorrow it does this? You get out, say, oh, Carl said he wouldn't know this because it's just not his style. And then it goes up, it gets taken over at 30 cents tomorrow. Is that possible? Of course it's possible, because I can't see the future when I tell you the things that I would do. But the thing is, the reason why I can do these things with so much ease and comfort is I don't care. I don't know. I totally understand. I don't know what's going to happen next. And I stop trying to figure it out. I just follow the path of least resistance, which is the trend. And you know what? SH1T is going to happen, and I'm going to miss some, but that's okay. My goal is to follow where the probability is. I don't think this is a high probability setup to the upside. And if it does, and I've done this, I get there's the probability of me making money on this if I stay in it is very low, and I get out, and boom, next 4 days, it's the best thing on the market. Okay, that's all right. I did the right thing. I followed my plan. I followed my system. Do it again. One follow-up for Hanelli, but I do want to follow this one. SHL still looks good, Hanelli. No complaints there. Happy to buy. In fact, happy to continue to add risk on this one. MCR. I'm not happy to add risk on this one for Harry. And Harry might be thinking, well, it's starting to get cheap. And that's fine for you, Harry. I would suggest it's not. I reckon the market thinks it's expensive. I would say that the market is looking at this and saying, I need to get the hell out of this thing, not because it's good value, but because it's terrible. There's so many better opportunities elsewhere. Even if this thing is cheap, oh, there you go. Look at this update here. Did that just update, or did I completely miss it? There you go. Takeover. There you go. That's it. So this doesn't change my analysis. On that day there, I would have said 0% hold, 100% sell, and 0% buy. Okay. And look at that. What a great segue. Boom. Must be a takeover. There you go. But I would have said that 100%, 100%, 100%. No reason to own it. And there you go. I don't know what's going to happen next. How many times, I would say to you though, and for the people, because I get this, I get people get angry with me on social media. Is a great way to prevent their anger. Let's take 100 times, right? Go find this chart. Okay, go find this chart 100 times, right? And then tell me how many times on those 100 charts. Go back, find that chart. Go back in history. How many times did this happen? Right? And do it 1,000 times if you have to. Okay, but do it. Do the homework. Oh, I'm not going to do that. I'll just take your word for it, Carl. Well, hopefully you will just take my word for it. But I don't know. What do you reckon? It happened 1 out of 100 times? I don't know. Was it 1 out of 100? Was it 2 out of 100? Was it 5 out of 100? Let's say magic happened, all right? And it was 10 out of 100 times. That's something that looked that bad, because you know what they do. The other 90 times, they kept going down. And that's the point I'm trying to make. This is just one of those, maybe 10 times out of 100 where that occurs. And this gets back to what I say. I follow the probability, everybody. I don't follow the possibility. Most mums and dads, most investors, they trade on possibilities. The possibility that that piece of junk that they bought 6 months ago, that is now a fraction of the price it was, the possibility it'll go back up. It's not the way I trade. I trade on probabilities. And here I would bet with the 90 times out of 100. So for the people that that keep hacking at me in social media, because they'll show me that chart. They'll say, Carl said the market hates this, and boom, it went up the next day. Yeah, right? That's my response to you. Okay, let's do SIQ. Stop typing in new ones, because I won't do any more after this one on Zoom. Now, I think that looks fine for you, Mark. Happy holder here. I like the way it's coming back. I like the way it's holding the long-term trend zone. We've talked about this in the past, haven't we? We've talked about the need to see these demand candles. And to be fair, it almost did it here. But we can see it wanted, it needed. It was drawn to that short-term trend zone. It was drawn to the long-term trend zone. And this actually looks pretty good. I'm going to say if this closes at or above the current close there, and this is still live at 616, if it closes at or above 616, I'm going to go cheeky, and this is a cheeky here, 1/3 on that. And that is super cheeky and super risky, and decide whether super cheeky and super risky meets your trading style. But I don't mind that at all. And it does show that I am flexible in, I have some flexibility within my system to buy stocks that aren't completely bottom left, top right yet, right? If they are doing the right things, I'm happy to throw a bit of risk on, because if I get it wrong, I've only thrown a bit of risk on, and I'll throw risk all over the place. Yep. because it's a bit at a time. And some of them stick, and then they get more risk. And then they get more risk if they stick again. And some of them will drop off, right? But I'm not hanging on to stuff like Domino's from 150 down to 0, right? It just doesn't happen. Okay, we've done those. I'm going to try and get to the chats now. Okay, done MCR. RSG I've done. Resolute Mining I've done. Very popular today. MCR done. Gold stocks. RSG, wow, that's popular today. Nick is in session. Nick saying, if you're interested in learning about protecting your portfolio in downturns, feel free to take advantage of my ebook. Nick touting my ebook there, which I think is a very good read. So head to the chat window in Zoom to download my ebook, or I think it's, I'll pin it to my Twitter if you want to read it. It'll be in the YouTube recording as well. Wisetech I've done. Chart was around 120 when it's only 47. Not sure what that one is, Peter. I'll probably figure it out in the replay. I'm just trying to get to the end of this here. NHC, NewHope Corporation. Oh, look at this. Is this one of those where Carl says, hey, it's losing the battle, it's losing the fight? Now, I think we were minus one thirds before this, but really I look at this yesterday. It took, a bounce in the NASDAQ, whatever it is last night. Sorry. Look at that yesterday, and 100% I would have said minus 1/3. So I'm going to say really all out of New Hope at this stage, because there was just so many reasons previously to get it, and that break for me is the defining factor. So for me, this is me all out, right? But have a look at today. Literally the candle after, big white candle, straight back up. Little bit of a shadow creeping in, short-term trend zone coming into play here, resisting prices. It's still bumping around that long-term trend zone, so it's still that inflection point. I'm going to say happy to be all out, and then similarly happy to get back in if I have to, even though all out, if it starts to do the right thing. And then I'll happily look at it then, but it's too early now to start to add risk back into New Hope, even though it's got a bit of a white candle there. So that is a pass from me. If you haven't gotten out and you've got a bit left, could you hold it? That white candle gives you the ability to hold onto it, but then you've got a clear point, a close beneath 490 is the new line of the sand for being all out. Okay, I think I've got to the list at the bottom of the chats. Now, we do have some Zoomers out here, and I want to get to some of their questions as well. The streamers. From Bullsheet. Hey, Carl, I can't believe I'm putting this one up for analysis, but interested in Myer. Well, there you go. I can't believe it either, that Myers is actually looking that good, Bullsheet. We did that one earlier, fortunately. JD, hey, Carl, love your work. Thanks, JD. What happened to the weekly market report on Monday? Look, something had to give. The fact I'm doing 3 live webinars a week, we had to, just in terms of me being able to do all the stuff I need to do, we had to make a call, and that one has just been suspended for a period, an indefinite period. But hopefully, because we figured with me doing the Thursday sessions, which are all macro, it kind of covers a lot of the stuff we did on that Monday. So look, apologies that we made it disappear without any announcement, but that's the reason why. Josh is asking about PH2, PH2, PureHydrogen. There we go, showing some signs of life. There's a pulse, a little bit of volume even, so that's good. It gets me up to a hold, okay, but I can't buy it. Why can't I buy it? I know I'm miserable, aren't I? And I'm sure PH2 has got the most incredible fundamentals. I mean, if you could sit me down for 2 hours and explain to me why I should own PureHydrogen, well, firstly, I'd say, look, I've just got something else better to do over here, and I wouldn't be bothered listening to you, and then I'd probably refer you to the chart. But the bottom line is, as good as all that sounds, the market needs to believe in it. And the market is not showing signs of believing in it, but it is having a bounce. Could I buy it? No, buy's off the table. Could I hold it? I can hold it because it's got 4 white candles. Would I be looking for very, very, very attentive signs to get out? Yeah, look, if it did something, like this and started to do that again, I wouldn't give it any more of my time and patience. I'd be getting out. If it doesn't do that, okay, if it continues to sort of break in this way, I think you can continue to hold on to it, okay? But even then, it's going to be a very, very long time until it becomes a buy. I can't give you a valuation on that, Josh, because there won't be any, there will, I can guarantee no brokers will be covering PH2, so I won't be able to give you a valuation. Resmed, now we're going for time, just about up on time here. Look, I can squeak in at a hold because it seems to be, cooperating with this demand zone. But having said that, do you really want to own something that does also appear to be creating, lower points of supply as well, consistently lower? A classical technical analyst that bought a textbook and read that textbook and will quote you textbook patterns verbatim might say that the price is going to go. They'll draw you charts like this. You see them on TikTok and Twitter all the time. Charts that go like this. So they draw a line there. They draw a line there, and then they draw a line doing that. And I just think that's just so ridiculous. That's not how technical analysis works. And if you see anybody that does draw pennants like that and then automatically draw the line going up, it's just absurd, because they're equally likely to do that because you've got building supply. I can go hold. It's not good enough for me to call it a buy. What would change it into a buy? And this is the lines I do draw. Oh God, it's got to do so much. It's got to do so much work. But something like that, I could get interested again, right? Because it's starting to show sustained signs of doing that. It's starting to show maybe it is breaking the downtrend. But even then, it's going to be in the too hard basket for such a long period of time because of all the supply, the latent supply in the system, all the way up. So yes, I can go a hold because of the demand, but it's so far away from a buy for me. Hey, look, I wish I had better news. If Resmed's your favourite stock, it's not my favourite stock. And I don't think it's the market's favourite stock either. And I think our goal as people who are building portfolios here is to try and find stocks that the market loves. Okay, yes, if we love them, that's a bonus, but stocks that the market loves. Okay, 13 brokers covering, plenty of coverage here. 16% upside to the average target. 2 strong buys, 9 buys, 2 holds. Looking at that, you'd say brokers are very, very positive. Bottom left, top right in terms of earnings growth. So a massive tick there and a massive tick on the earnings outlook going forward. I was going to say massive, no, because we do have some an earnings decline in 2026, which does actually drag on our 3-year compound annual growth rate to bring it back to roughly a market return. Now, here's my big problem for Resmed. It's got roughly a market return in terms of its growth rate, but you're paying way, way, way above the market return in terms of its PE. So this is where my analysis and the broker's analysis will diverge. They are predicting that Resmed has got way more quality than it deserves, I believe, and therefore I would say Resmed is not cheap, as the brokers suggest, but probably on the wrong side of fair value, if anything, because I think this is ridiculously high for that. So I'm not necessarily a true believer in this one. The 26, however, is not terrible. Look, it's not terrible. Even if I stuck with 26, it's still too expensive, and therefore I think what you find here is my valuation is closer to the real world target of what the market is doing compared to what the brokers are saying in many ways. MDR, let's have a look at this one, which looks pretty good here. So I don't mind this one. Happy holder. I think it can do a bit more work. Maybe hit that, pull back, hit that again. And if we see the right candles in the light green zone, Josh, that's where I'd be looking to buy, but not until then, because I think we need to see a bit more work here. Okay, but happy holder in the meantime. And from Phil, Neuren, which I have discussed, but just reading Phil's comments here. When should I take some profits at NEU? My one lone winner in a sad 2 months. Well, I think, you know what, if you've got NEU, you're pretty happy. And I did answer that question for you, Phil. Probably asked that before I got onto it, but I can't see any reason at all to sell that. It just looks like a monster. But you know the candles, Phil, the candles which I've drawn in the past, which you need to see to tell you that supply is coming in and it's time to do what the market's doing. Okay, you see that candle and it's telling you that the market is getting out, so you better get out as well. But until we see that, there's nothing to do. Hang on. And that does bring, oh, well, there we go. That was that one there. So what was it? Resmed was, I think I might have missed a couple. So, but only a couple. MDR, that one there for Josh. So Josh, the green zone, the right candles in the green zone, put together that chart with the words I spoke not more than 2 minutes ago. And NEU, of course, we've seen before. Let us head back to here and say that I do those other live market analysis sessions. So if you're not on board yet and you want your fix of macro, understanding the big charts, how the world works in pictures and how to bring that back to your portfolios, register. Indices, commodities, forex and crypto edition on Tuesdays at 1 p.m. And I think you need to get onto the Friday sessions as well. Even if you're not trading USA shares, I guarantee you are going to want to sometime in the next 6 months. Okay. So start to familiarize yourself with the companies. I do the same thing I did here, charts and valuations. My Thomson Reuters spreadsheet works just as good on those US stocks, and you'll get to see whether Apple's good value or Tesla's good value. Head to www.thinkmarkets.com/au webinar to do so. If you're not a client of ThinkMarkets, you really should be. That's not the one I want. There it is there. We've got everything you need for your self-managed super fund. If you're trading ASX equities, $8 flat rate, it is HIN and CHESS sponsored. You might find a cheaper rate, but you won't find one that's CHESS sponsored and not with our customer service. I do shadow shop the other brokers, okay? And thing I check up on most is customer service. Do I get my questions answered? Can I even contact them? And I will tell you, for the most part, if there is a cheap rate out there, you cannot contact them. They don't have a phone number. You can just call up and get your problem solved. You need to go through chatbots, and chatbots using AI, not even with a person on the other side of that chatbot. It's AI chatbots. And you say, hey, I can't do this on my account. And they come back with, marmalade, right? AI's on the fritz. We also have your CFDs as well that you can trade FX, indices, commodities, futures, crypto, market-leading spreads, and commission-free on all of those products. Award-winning broker. Keep getting nominated for them. We keep winning them. Great customer service. Head to thinkmarkets.com/au to open an account. If you're watching me on any of the streaming services, make sure you hit the subscribe button to stay notified of every time I go live or my video updates, and hit the like button. It's very important you do that. Because it lets ThinkMarkets know that you like what I'm doing, and therefore will continue to do more of it. Apart from that, it has been a pleasure chatting with you today. All the best for your trading and investing until we catch up again. Bye-bye for now. But before you go, don't forget that everything we've discussed today is general in nature, has not taken into account your personal financial circumstances or particular needs. So before making any investing decisions based upon today's information, please consider it carefully or seek the help of a financial professional. The rest of the information in that disclaimer is important. You should read it. But if you have any further questions about ThinkMarkets or our products, please head to our website and download our product disclosure guide, our PDS.